Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. Green is the new black, given the impressive growth of the market. Worldwide spending on cannabis reached $9.5 billion in 2017 and is expected to grow to $32 billion by 2022. It's no wonder so many traders have been flocking into cannabis stocks and indices over the last year. While this market offers tremendous opportunities for sensible traders, it's important to understand both the drivers of the growth as well as the different ways to access the balanced exposure to this trading niche. But here's the four factors driving cannabis market growth. Aside from the inherent hype that surrounds the cannabis industry, there are four key factors that many experts agree in the fueling the recent experienced growth. They are technology, product diversity, international expansion, and displacement of black markets. Factor number one is technology. The industry's long-term sustainability lies primarily behind medical products, from production companies applying engineering to maximizing the strength of certain components, to biotechnology companies increasing investments in research and trials and becoming more experienced. The conditions are set for growth in the number of medical applications of cannabis. Cannabinoids have been proven to have a variety of positive impacts in the treatment of a wide range of ailments. Researchers are exploring its potential to tackle such enduring problems such as epilepsy, Parkinson's disease, anxiety, depression, and even breast cancer. Number two is product diversity. Cannabis has CBD or cannabidiol, a non-psychoactive component. As this component can be used in the production of many medicinal and non-medicinal products, growers have been engineering a large variety of strains to optimize certain components and increase its applicability across industries and products. Number three is international expansion. Today, cannabis recreation consumption and, most importantly, production has been legalized in several countries. This can be evidenced by the fact that large companies like Aurora Cannabis, Tilray, and Canopy Growth are now active in many countries. This regulatory wave is expected to continue, with countries like Luxembourg already announcing liberalization on the cannabis market over the upcoming years. Number four is the displacement of black markets. As more jurisdictions loosen their regulations and in some cases legalize its recreational usage, experts concur that it's a significant chunk of the black market revenues will be absorbed by large corporations like those present in the main cannabis stock indexes. Why is legalizing cannabis proving so difficult in the United States? The marijuana industry has appeared nothing short of unstoppable on a global scale in recent years. To our north, Canada became the first industrialized country in the world to legalize recreational cannabis last October. Meanwhile, to our south, Mexico gave the green light to medical marijuana in June 2017. Nowadays, there are more than 40 countries worldwide that allow a physician to prescribe medical cannabis in some capacity. And yet in the U.S., it's truly a mixed bag. On one hand, you have an all-time record of Americans at 66% now favor the idea of nationwide legalization. We've witnessed this support translate into 33 states having legalized medical cannabis, 10 which also allow adult consumption. If cannabis were entirely legal in the U.S., as in Canada, it would almost certainly be the most lucrative weed market in the world. So why is legalizing cannabis in the U.S. so tough? First, we could state the obvious that to support for legalization, it really depends on the party preference. And right now, there's simply no pressing need to push for legalization, even with the American public firmly in favor of cannabis reform. Cannabis right now just isn't polarizing enough topic yet to sway voters. Third, and maybe the most important because everything revolves around money, is that legalization creates a money problem for the federal government. As a Schedule I drug, businesses that deal in cannabis are disallowed from taking normal corporate income tax deductions per Section 280E of the tax code. With only cost of goods sold able to deduct from the revenues, most profitable cannabis companies pay a very high effective tax rate. So if cannabis were suddenly legalized, it would no longer subject these companies to Section 280E, thereby costing the federal government about $5 billion in tax revenue over the next decade. And with that, we're going to roll this one up. I'm Josh Kincaid. Don't forget to like, share, and subscribe, or don't, and I'm out.